Good afternoon, everybody. Tom Fritz here with EFG Group as well as the International Futures Group. It's the day after the 4th of July weekend, and the 4th of July weekend, as seasoned grain traders know, can really throw some curveballs at us, especially when the market's on an extreme going into that weekend. Well, this weekend was no different. Prices came in sharply lower Sunday night, early Monday morning. Then they tried to rally. What's going on here? We look at crop conditions this afternoon. Corn crop on a national level is stabilizing. It's amazing what 4 or 5 days of clear weather will do for the wet areas of the eastern Corn Belt. So we have stable conditions. In fact, the corn conditions actually improved a point to, what is that? 69% good to excellent. The trade was actually looking for a percentage point drop in conditions. But I think the stabilization of the eastern Corn Belt, coupled with the western Corn Belt still staying quite good looking, adds that to the equation. Going forward, what do we have to look forward to? On Friday, the USDA will update supply demand. They're going to use the June 30th acres. The big question is, now we know those June 30th acres were off from what they told us in March. Will they fool with the yield? Earlier this month, the corn crop was rated 74% good to excellent. Now it's 69% good to excellent. Is that justification for a lower corn yield on this report? Couple that with the idea of a lower carry-in due to the lower than expected June stocks, you might have some surprises for this July 10th supply-demand update. So with that said, going forward for the balance of the week, I'm looking for a choppy trade. I wouldn't be surprised to see a little bit more downside, especially since the corn market finished 10 cents off its lows today. So with that said, you know, maybe some easing market action for the next couple of days. But I get the impression the market will be on a firm tone going into next Friday's supply-demand update. Looking at the soybean market, soybean conditions have stabilized. The trade was looking for a percentage point drop in the good to excellent conditions, comes in unchanged at 63% good to excellent. Once again, eastern Corn Belt stabilizes, western Corn Belt stays good looking. So what do we have to look forward to between now and next Friday? We know we've got higher acres to deal with. Will the USDA play with the yield? Crop conditions earlier this month, 69%, 70% good to excellent. Now we're 63% good to excellent. Will that justify a break in the yield that they've been forecasting? We also know we should have a lower carry-in number based on the lower than expected June 30th stocks. So maybe it's just me, but I wouldn't be surprised to see a much lower carryout projection on this report. Also, we have to remember, we still have roughly, 3.4 million acres of beans yet to plant. And back on June 30th, the USDA did tell us that they're going to resurvey the states of Kansas, Arkansas, and Missouri. But they won't reflect that until the August report. So can we really believe what the USDA is going to have to say on this July 10th update? Or do we really have to wait until August? So, but if you look at what the trade gave us after the 4th of July weekend, meeting today, they gave us a little bit of a sell signal. But with the acreage issue up in the air, I'm not sure you're going to see all that much downside follow through. Wheat market. We've got a decent wheat crop out there. The hard red winter wheat crop, don't be surprised to see a higher yield over there. I'm being told Kansas has just a great crop considering all the ballyhooing we had earlier this season. Soft red crop, well, to me it's a condition issue, not so much a supply issue. But we are losing some bushels up in the Northwest where they've had the big heat wave. Well, this morning we came in, or I should say Sunday night, we came in sharply lower. Global economic fears, good harvesting progress. Well, once the market closed at 7:45 a.m., seems like the principal topics of conversation were the declining yields in the European Union, as well as the declining yields in Canada. And market reopened at 8:30 this morning, and wheat prices, depending on which contract you were looking at, rallied anywhere from 27 to 33 cents. So it looks like the trade's focus is moving away from a domestic crop situation to a global crop situation. So with that said, on the supply-demand update come Friday, you may see some neutral to bearish looking numbers for the U.S. wheat numbers. But will the USDA incorporate the idea of lower yields in the European Union as well as Canada? So with that said, I expect a choppy trade, but maintaining a firm tone in the wheat market as we move through the balance of the week.